Hello everybody, it's me the Boss Hog, and today we're going to look at my stock portfolio as of the week ending the 25th of March 2022. Let's do it. Alright, so I guess we'll start at the top left. Pretty red week, honestly. Last week felt really good. I was up like 5.5k. This week you can see here I gave back about 60% of it. Pretty broad based, I would say, between the UK and the US, but maybe slightly more on the UK. But again, my portfolio is about 2/3 UK, so this is sort of similar percentages basically. I would say overall my portfolio remains green, having become red a few weeks ago. That was because of my, or in part because of some exposure to Russian holdings. Decided not to add any capital this week. I remain in the process of remortgaging, and also my wife really wanted some family photos, so decided to be nice there. I do plan to be adding again from next week, payday, and also I expect to have a bonus coming as well. So that's the current plan. Both of my tax efficient ISAs are maxed out for the year. I did do a bit of trading this week, but almost all of it is basically with one eye toward a new tax year, and basically making some changes between accounts, etc., etc. So we'll touch on that in just a second to explain what they are and why I did it. Just one dividend this week. It's not a huge one, although it's not tiny either, just 17.76 there. But this is from Amcor, so this is the first time I've had a dividend from this company, and it's become my semiconductor play basically. It's a fairly small company by US standards at least. But I think it's kind of reaching that point of becoming profitable, and has got a good path to, grow its dividend basically, which was increased 25%. So yeah, to me, it's like a dividend play meets growth. So I'm actually really happy with this dividend for a quarter, and hope to get a lot more in the future. So anyway, let's have a look at my top 10 next. All right, so I'm just going to gloss over anything that hasn't got any news here. So we'll start with National Express. There was a Motley Fool mention just about the fact this might be worth a look. I've decided not to call this a recommendation, but it kind of touched on it, explained that, although it's not risk-free, it's basically worth some attention. That's kind of how I feel as well. GAMA is definitely worth talking about. That's probably where I'm going to spend most of my time here. So they published results this week that were in line with expectations, I would say. Revenue up 14%, EPS growth up 25%. I did mean to do a video this week, but my wife's got lots of work at the moment, so I've been doing a bit more of the childcare. So I haven't yet done it, but I'm hoping to squeeze that in later today. But I would say the results were solid. No real surprises. They basically guided expectations a few months ago, and again the share price just dropped. I mean, it dropped even worse than this 9% on the news. I thought it was perfectly okay. It wasn't like stellar, but again, the expectations here are extremely high for this company. I would add as well that Simply Wall Street had an article highlighting the excellent return on equity, earnings, and payout ratio all being around 30%. I would also say as well that their payout ratio number was averaged all over the last 3 years. Last I looked at this, their payout ratio was 17%, and that's really because they're growing their dividend between 11 and 15% a year, 13% this year. But their earnings are growing much faster than that. So it's basically just meant that their payout ratio has been going further and further down. So they've got a bit of a war chest. They're actively looking for acquisitions. And to be honest with you, yeah, I really like GAMA. I'm in the industry, I like the company, and I think it's materially undervalued at the moment. So I expect this to become my largest holding next year, as in next tax year when that starts again. So interesting. I won't touch on Hollywood Bowl. Games Workshop here, this was a really interesting one. So I would say they had a reassuring trading update, whereas GAMA did in line with expectations and got punished. Games Workshop went through this weird journey where it jumped like 11% in a day, and then over the next 2 days went back down more or less to where it had been. The trading update was more or less like, don't worry guys, everything's in line with expectations. There's a lot of concerns around this company, whether it's able to grow, had logistical problems, didn't have the best online experience, warehousing issues, I'll include that as well, as slightly different to logistics by freight, I mean. So the trading update was seen as good, but to be honest with you, it was a bit strange because to me the fundamental case here is that the business is trading on something like 17 current PE, not even future PE, and it's a real high quality company. Also as well, I would say that at least part of the reason maybe that the jump was there is because it was a good dividend. This is one of the few UK stocks that pays quarterly dividends, and it has a dividend policy of just paying out truly surplus cash is what they call it. But basically, for a £72 share, they're annualized dividend is now £2.35, so it's about 3.3% dividend for a growth stock. So this is looking pretty good. I wouldn't buy this company expecting it to be a dividend play, but at the same time, I have 160 shares in this, so 70p a share is a nice dividend every quarter for a company that's not even meant to be a dividend company. So that feels really good. And yeah, I like the general direction. And again, I think the market's worrying too much about lots of things at the moment. So I continue to buy Games Workshop. Amcor had a good recommendation from Simply Wall Street, as well as the good divvy that I mentioned. So that feels really good as well. Not much else to add there. Genie, nothing. Phoenix had a Motley Fool recommendation, just highlighting its amazing dividend, basically. Cool. Yeah, it's 8 and a bit percent at the moment. Next up, we have T Rowe. So I decided to call this a very strong recommendation from Motley Fool. They really serenaded it and said how amazing it was. It's like multi-decade lows in terms of its comparables and earnings ratios, etc. So I'm actually quite happy with my T Rowe size at the moment. I will look to buy next year, probably something like one a week. As long as it's under about 150. If it's more than that, I still will buy. I think it's still a good play. But I just be slightly less than one a week. So yeah, I think it's a good company at the current price point. And last but not least, CRM. So Salesforce, again, another Motley Fool mention. I think at the moment it does trade on a really high multiple. The expectation is that the company is going to continue growing its earnings and revenue very rapidly. But to be honest with you, I really like the suite of software that they've built. Again, this is kind of touching on the area I'm in. My wife's actually quite a Salesforce expert. She knows the system better than me. She does migrations on it. But I like what they're doing basically. So again, this sneaks into my top 10. And I would say as well, interestingly, my top 10 weighting has gone up to almost 90%. So basically, they have been outperforming the rest of my portfolio. So now I have a very dominant top 10. And there's a big drop off as well between like 10th and 11th place. It's very convenient for a top 10 list. So broadly speaking, happy-ish with this, but obviously there's quite a lot of red here. But I remain pretty committed to these, and happy to continue buying them. As you'll see, in fairness, I've bought a few of these this week. All right, so actually this week the main movement is on Games Workshop. And to be honest with you, I thought I really timed this very well, because literally the morning before their trading update, I bought 12 shares, sorry. And then I bought them at like 72.10, I think it was. And the share price went up to like 80 or whatever it was. And I was like, oh, well, great timing that was, right? That feels really good, instant £100. And then the next 2 days it went down. So I decided to buy another 2 shares at like 76, 75. Again, I'm really happy to be continuing to buy these shares. These all qualify for the dividend as well. Not that that's the main reason for buying these shares, but it's a nice to have, in a few weeks' time. I just think it's basically a very valuable, a very good valuation now, actually. So I continue to buy. Again, I appreciate I'm more optimistic than some, actually less optimistic than others, but I'm really comfortable continuing to buy Games Workshop. Next up, I continue just to average into Genius and Facebook/Meta fairly slowly, but I decided that because I was doing some portfolio tweaking this week, I'd buy a few more shares. Genius is my very red at the moment. I mean, I'm down like $5,000, all unrealized. But I went on a company update call at the end of January, liked what I saw, got a good understanding of the business, and now actually feel very comfortable continuing to average in, despite the fact it's still loss making. It's basically using a profitable European arm to grow a not yet profitable US arm, but I think it's got a great technology and I really like the direction of travel. No worries for me with this stake at all. I feel quite confident in it. Obviously, I wish I'd been more patient building my stake, is what it is. And now, I continue to average in. My average at the moment, by the way, is about 840. So obviously when the shares are down like 450 or whatever they are, that's quite red. But I'm in no rush or panic, and I expect to be holding these till 2024, maybe even longer, when the company starts to basically print money. And Facebook as well, again, I got into this relatively recently. I'm still quite optimistic on the short to medium term. And to me, this is a kind of short to medium term trade. I basically am expecting that when the next results are published, I'm either going to be really happy and the share price is going to respond as well, because I'll be happy. Or actually, the worries that people have about, can it transition? Is it a passing fad? That will come true and I'll basically realize a loss and sell it. But right now I'm down a couple of percent and feel quite happy with my stake, which is about 1% of my portfolio. So yeah, both of these I feel fine with. And Gamma, yeah, I bought some more after the results. Even I haven't done a valuation video on this, but like I said, I do plan to. Even looking at their kind of 5-year averages, I believe the shares are worth about 19.50. Personally, I think they should be trading on a slightly higher multiple. So, I'm in the kind of 24, might be pushing it. But again, I really like this. It's like my main dividend growth play as well. It's like your stereotypical textbook example of a dividend growth play, right? If they can keep growing a dividend 13% a year, I'll be very happy by the time I get to retirement. I have a huge yield on cost. But in fairness, I just think there's now a good capital upside as well. So, yeah, I definitely expect these to become my largest holding next year, in the not too distant future, in fact. So, anyway, obviously didn't add any capital this week, so let's see what I've been selling. All right, so I actually want to talk about all of these quite quickly. So, Amazon, Microsoft, and Apple, I'm just going to group them together. I basically decided to profit take on all of these. Amazon especially, I made a pretty good profit on, in at like 2,700, sold at 33, whatever. So that felt quite good. Not huge stakes, other than maybe Amazon actually is a medium stake. But yeah, my plan here is to basically start adding them into my tax efficient accounts. I've just decided that my non-tax efficient account, so let's call it my general investment account, it's actually now getting quite large. It's 5 figures, it's there. And so I wanted to start building sizable stake in these other businesses without having to worry about tax. So I decided basically to leave purely trading in my general investment account. And then, these ones I'm going to put into my ISAs. So just it's basically in preparation of a new tax year when I expect to start averaging back into these companies again. I decided to separate out Danaher. This is a company I've traded twice to modest profits, I would say. Overall, I'm probably up about 8%, something like that, just a few percent each time. I think it's a great high quality company. It's making a lot of money, but at the same time, I think its valuation is going to be really hard to keep up with. I just think it's very expensive. Maybe I'm wrong, but I probably won't be getting back into Danaher unless it goes, back to the mid 200s, something like that. So I just think it's very expensive, but I totally get why people would like it because, again, it's a very high quality company. But yeah, it's not for me. I took my profit and I'm going to run basically. Next up is Lloyd's. This was always meant to be a short to medium term trade. Originally, I was targeting 20%, but I decided that with Gamma basically dropping 10%, it was a good opportunity to buy. So I decided to take my 12% few weeks profit on Lloyd's. About a month, I think I've owned Lloyd's. So that, again, I'm perfectly happy taking, a few weeks for a 12% profit. And we just move on with our lives basically. Again, if Lloyd's goes back down to like the mid 40s where I pick this up, then I will happily look at it again. But I think it's almost up with events. Whereas I think Gamma is now materially underpriced, so I decided to make that trade. And last, I kind of wanted to address this because, again, I did a video on Fever last week. I moved down, although I still think basically I think Fever is a hold, because although I think Fever is about £22 a share and its share price at the moment is about 18.5, I think basically you need that kind of level of safety margin. So like, I wouldn't advise people to be buying Fever at the moment. Like, I'm not. And actually my plan is basically to sell whenever I'm green. So I'm selling one Fever a day and basically buying into a very small new position in Elixir International, which is sort of a small professional management services kind of company. A very small stake at the moment. I'm basically just selling, one Fever share every time I'm green. So far I sold 3 shares. I'm still planning on to keep a material stake of Fever. I'll probably look to sell, currently I've got 252, probably get down to about 225, something like that, and then stop and decide, that's sufficient. There's still a lot of potential with Fever. I still like it as a brand, and I really love the product, as I've spoken about before. But again, I think that they have some things that they have to sort out before they can start justifying higher share price. About a year ago, almost, I did a video on Fever where I said, it's 21 to 28, I think I said. And I decided in the latest update to give it an actual number. So I did 22 for the reasons that are in that video. And I stand by that. I still think that's reasonable, but I won't be buying Fever again until it's about 15.50, because again, I just think there's sufficient worries. And also as well, to be fair, when I was first buying Fever the rest of the market was so expensive that, a 40 PE didn't seem outrageous. Whereas now I think you can get a lot safer companies for the kind of risk reward that Fever is asking you to take. So, it is possible that Fever will rebound, and I do see that path there as well, to be clear. So, do your own research and take that risk if you feel comfortable. And there's also always the chance that the likes of, Diageo or somebody like that will decide to add it. I mean, it's a fairly small company for these kind of organizations, so, it could be snapped up. But that's not really the reason I'm holding it. I'm holding it because I think Fever Tree does have a great brand, actually, and a lot of upside potential. But again, they're not really delivering on that quite yet. So for me, I'm just selling down one and basically just diversifying slightly into Elixir. And that has a very broad buy-sell spread. So again, to me, it just makes sense to average into it very slowly, even though I think it's a very promising company. So anyway, that's everything for me this week. Any questions, comments, etc. down below, please. Otherwise, thank you very much, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.